In the first 2 years, we're averaging about 20 million ounces of silver equivalent, which puts us somewhere in the top 5 silver equivalent producers globally.
This is Jay Martin.
Mike, it's great to have you in today. I'm excited to chat with you.
Yeah, thank you, Jay. I'm thrilled to be here again, and it's always great to be in your studio.
Yeah, man. So there's a handful of different directions I want to go today with the Vizsla story. I want to get generally caught up. I usually like to get your broader thoughts on the market and the silver sector. Given Vizsla today and where you guys are at in the company story, it makes more sense to start with the headline because about a month ago, I think the future of Vizsla Silver changed, or at least it changed in the eyes of shareholders and prospective shareholders. Will you say that's correct? And if so, what's the headline, Mike? Let's start there, and then I'll pull on some threads.
Well, I'd say the headline is that, our vision has always been to become one of the world's largest single asset silver primary producers in the world. It's a global thing. And with this PEA, with the PEA that we published a month ago, that's very attainable and within a few short years. So we put out economics that are absolutely industry leading, a 9-month payback, 86% IRR, $1.1 billion NPV, and a CapEx that's less than half of our market cap right now. So incredible numbers by any standard.
Yeah, so 1.1 billion net present value of Vizsla Silver, that's what came out. And the CapEx to build your mine came out at around half of your market cap. And that's sort of in the $250 million territory.
Right. Yeah, 224 million.
224 million. Okay. So what does this mean in terms of timeline right now, Mike?
Well, I think what's really important about this PEA in terms of timeline is that, this gives us the footprint and the step forward to go into permitting, to submit our permit a little later this year, which is very important, for the progress of the project. But really what matters here is that this gives us a framework to go and talk to potential debt financiers in the space here, project finance groups, that as we move from PEA into feasibility, and our goal is to do feasibility kind of mid next year.
Okay.
It allows us to basically demonstrate how this project looks as we move into production and get finance faster than a company typically would. So this is really giving us all the framework in order to achieve that goal of becoming one of the world's largest single asset silver primary producers. Now working back, let's say from first silver, and we've talked about first silver that means the first silver that we're going to pour from the project being mid 2027, or let's say the second half of 2027. That gives us about an 18-month construction period, and gives us time to basically in mid 2025 release the feasibility study, and then start working in earnest to build and construct this project.
So when you say 86% IRR on the project, so walk me through those numbers, Mike.
That's incredible. And this is at a base case, at spot prices. The day that we announced the PEA, it was a triple-digit IRR. Typically, companies will have a hurdle rate of a 20% IRR. A company will say, if we meet with the PEA, if we hit a 20% IRR, that's something that we can put into production. So, 4 times the hurdle rate, let's say, for typical precious metals projects. At the time of publishing, it was 5 times that hurdle rate. So, just really incredible industry-leading economics. If you looked at companies like Silvercrest and Mag Silver, their IRRs were really, astounding at the time, really impressive at the time. They were somewhere around 50 or 60% IRR. Of course, we're much higher than that, but this 86%. What that really means is that, it's a very high margin and a high margin mine that gives a, incredible return on investment. Another way to look at that too is, our NPV to CapEx ratio, which is about 5.1 times. Silvercrest, again, great example of what's possible here. Silvercrest is a great playbook on, how to create value for investors in this space. And so we want to follow that playbook. They had a 4 times NPV to CapEx ratio. We were kind of hoping that we could hit something like that when we set out to do this. Of course, having a 5 times NPV to CapEx ratio is truly industry leading, and puts us on a chart. You can see where we plot this out. It puts us in the top left, which is, the best place to be.
Top left in terms of grade and reduced cost and.
Exactly. Yeah. And really all that coming into return on investment being that NPV to CapEx. So,
yeah. Okay.
A lot of times you'll come across a silver project and it'll have $1 billion NPV, but it'll cost $1 billion to get there. For us to have a CapEx that's really just a fraction of that NPV, just demonstrates actually really in any business, mining aside, how rare and how valuable this project is.
I got to ask therefore, Mike, like why is it going to be, I don't want to say cheap, but so cheap, right, to build your mine, $224 million?
There's a couple of good reasons why it's going to be so cheap to build this mine.
It's funny to think, it's only $224 million, but anyways, what's going on?
Well, but we're living in a world where typically it's, $1 billion CapEx and the market cap of the company is, 20 million. And it's kind of this impossible calculation to achieve. That's what's so special about Vizsla is that even if the market cap were to double, and the CapEx were to double, it'd still be something, very attainable for us here. But I think the reason why, this CapEx is so, let's say, approachable and reasonable for us to achieve really comes down to philosophy. It comes down to 2 things. 1, philosophy, and 2, the infrastructure of the project and the nature of these veins that we have here at the project. So if we start with philosophy, a lot of companies will opt to have the fancy office building, the big paved roads, a lot of the accoutrements that, you really don't need to be a functioning, profitable mine. Right. So, when we brought on Simon Smirlik as Chief Operating Officer, about 4 or 5 months ago, of course, Simon was a very early director of Vizsla and a mentor of mine. At the time, he was the COO of Ausenco Engineering, one of the world's greatest kind of mine building groups that are famous for turnkey lump sum builds of mines. And a great example of that, of course, is Las Chispas, where they had the contract to deliver, a process plant and a lump sum turnkey mine for Las Chispas for $138 million US. They did that during a time where the pandemic was raging, peak inflationary pressures on suppliers and things like that. So it was a huge challenge, but they did that. They brought it in, and it worked very successfully for Silvercrest. Simon brings that philosophy of you don't need all the bells and whistles. What you need is a functioning process plant, a mine that targets the highest grade material first, and really brings forward cash flow. A lot of companies don't look at mines like profitable businesses. They look at them like experiments where they want to have, say 15 years of mine life, and they want, every year to be the same, amount of ounces produced and
Why
things
do you
like
think
that.
These projects are often approached that way?
I think it's a lot of the time it's because they've always done it this way. It's oftentimes, people in our industry, technical people, maybe don't look at things as a business, right? They look at them almost academically. And with, I think with Ausenco's track record, they would put their own balance sheet up and they would say, we'll build this for you. This is a price that we're quoting. We'll build this for you and we'll collect the difference, what we can build it on. So it was imperative that they did things the right way and in the most efficient way. So we bring that attitude of the philosophy of what needs to be profitable, needs to be done efficiently and for the lowest amount of money that works, and it doesn't need to be flashy. So that's the first thing. One is that philosophy. The second thing is that, this project is probably the best infrastructure project that any of us in the company have ever seen. It sits an hour inland from Mazatlan on the Pacific coast of Mexico. There's 1 million people in Mazatlan. There's a deep water port there. There's rail. There's high tension power that runs from Mazatlan all the way to Durango. And as it runs from Durango to Mazatlan, it crosses our property. And if you stand to where we're going to build the mill site, you're literally standing underneath high tension power. So the power is right there. The roads are right there. We've drilled 400,000 meters of diamond drilling without ever having to build our own road there. So it's an incredible project from the perspective of infrastructure. So that's the second reason. And the third reason is just based on the location and the nature of this high grade mineralization, that it's really just subsurface. So we're talking about an underground mine that we really only have to start digging, 100 meters below surface to get into mineralization. And that means that we can bring that mineralization above surface and then run it through the plant and, and receive the benefit of very high grade, high margin material, AKA cash flow, really early on in the mine life. And that pays back, the CapEx very quickly.
Okay. Now, if I recall the PEA accurately, right now you're looking at like a 10 or 11 year mine life with 15 million ounces of silver equivalent per year. Is this correct?
That's right. Yeah.
Okay. And what struck me most, Mike, was so the Panuco district is largely unexplored at this point, right? I think about 30% of it was factored into your PEA at this point. Can you explain the relevance of that, what that means?
Yeah, I think, and just to touch on your first point there, you're right. So we have, if you round, I think it's 10.6 years at 15.4 million ounces, something like that. But let's call it 11 years at 15 million ounces. But in the first 2 years, we're averaging about 20 million ounces of silver equivalent, which puts us somewhere in the top 5 silver equivalent producers globally. So our goal between now and feasibility is to actually, increase the amount of ounces that are being produced.
Just want to stick with this for 1 second. The first couple of years, 20 million ounces of silver equivalent produced per year. Your PEA was done at a $26 per ounce calculation, I believe. And your all-in sustaining cost on that was around $9 per ounce, correct?
That's right. Yeah.
It's amazing.
So it can be very profitable. Very high margin. The nature of these, and this gets back to your comment there about the unexplored nature of these projects, but to really get a sense of what's possible and why we're so excited about Panuco and this project is, there's 15 billion ounce silver districts in the world. 9 of them are in Mexico. Those are districts like Fresnillo, San Dimas, and San Dimas is probably the best analog to what we have. It's about 80 kilometers to the north of us. It's been producing for 100 years, 100 plus years in commercial production. It's produced, well over 1 billion ounces of silver equivalent now. It's been a prolific producer. And, these veins kind of keep running. And, as you're mining one, you discover another one, that's intersecting or something like that. So once you actually get underground, the potential for more, call it near mine exploration potential, or just more resources closer to where we're mining is very real. So I suspect that, knowing that a PEA is really just a snapshot in time. So, when you look at it and as just a snapshot in time when it comes to, certain resources that we have right now, I'm confident that, as we explore more in the district and also when we start our test mining later this year and get underground, we're likely going to find more material, more high grade material around Copala. So, it still is our vision to become, a very serious, very large silver equivalent producer in terms of annual production. Of course, maximizing profitability as we do that. But I could see us still becoming one of those 20 million ounce producers, for a sustained period of time.
Right. And the resource right now is around 160 million ounces of silver equivalent, correct?
Well, so the resource right now is about 325 million ounces globally.
Yes.
That's indicated and inferred.
Yeah. Okay.
Okay. And what we're really hoping to do, and our goal is basically to grow that to 200 million ounces of indicated silver equivalent.
Okay. And when you say your goal, what sort of timeline are you looking at?
A lot of it's been done already. We're hoping to wrap up our infill drill campaign probably by the beginning of fall.
Yeah.
And the exciting part about that is that yes, we'll likely be able to upgrade that resource. We'll be able to put an updated resource statement out before the end of the year. But the 2 rigs that we have doing the infill drilling right now are going to be moved to be repurposed for exploration across the district. So really exciting to think that we'll be out there making, but hopefully new discoveries and drilling, virgin targets that have never been drilled before across the project.
Phenomenal economics, very exciting. And again, I keep coming back to first couple of years, 20 million ounces per year. You use $26 per ounce in your PEA with a $9 all-in sustaining cost. I'll let the audience get their calculators out and figure out that math, but at 25, it's a lot of money. So where does this put you? Because there's a lot of conversation right now about just in general, where is silver going to come from, right? We're not seeing new mines emerge. I mean, you're a rarity, right? There's not a lot of new production coming online. How's the reception been? I know you're speaking at a lot of conferences right now and not just talking about Vizsla, but you're sitting on silver panels and just speaking to silver investors, educating them on the landscape. So, where does Vizsla sit today, you think, Mike, in the bigger picture of silver production and the consequence of that?
Well, I think what's really amazing is that even if we were to hit that peak production of silver, and we're talking about silver equivalent, it's about 60-40. So we're, max years, maybe you're talking about 12 to 13 million ounces of strictly silver production.
Okay.
The deficit in the silver space, continues to grow, and it's an astounding amount of silver in the deficit. So much so that our annual production really is just a drop in the bucket. It doesn't make really a difference at all. And that's because most silver is produced as a byproduct of base metal mines in South America, or these big copper porphyries, or lead and zinc mines. So when the silver price goes up, it's not like mines can just turn on and say, okay, we're going to produce another 20-30% more silver and kind of meet this expanded demand, increased demand. It's not like that. It's really above ground stores of silver, like coins, or people buying it for investment purposes that now start to sell to buyers that then take it to industrial purposes and industrial ends. The supply deficit is really driven by the increase in demand, solely based around solar panels and electric vehicles. It's really industrial demand that's at a feverish pace driving forward the price of silver and this demand of silver. So going back to my point earlier is that if Panuco were to become one of the world's largest single asset silver primary producers, which again is one of the rarest things in the world, something that very few companies really have the ability to do, it still doesn't really impact this supply scarcity that we see here. So I suspect that means that silver price is going to have to increase substantially to incentivize new production, whether it's byproduct production, through other mines where the byproduct actually becomes so valuable that it becomes the primary target of these mines, and brings old mines online, or new discoveries can be made because of this incentive price. But the idea is, I think that silver being so rare, it's actually hard for the actual primary supply, the mine supply of this metal to catch up. I think we're just going to see very, very high price, and the rarity of silver being so important.
Right. I mean, it gets back to so many commodity stories that we've seen over the last decade. I mean, uranium is a great example. Rick Rule's been on my stage for a decade saying, look, either the price is going to go up or the lights are going to go out. You know, you can't have both, right? Low prices and electricity. Silver is one of those, it seems, at this moment in time. Demand's not going anywhere, right? And supply is stagnant and declining for the most part. I want to get back in, you're going underground with Panuco. And I have to ask just two reasons. Why, as opposed to open pit? And then given some of the statements from Mexican politicians, Mike, what do you make of veiled threats to shut down open pit mining in Mexico? It seems crazy to hear that given Mexico's such a mining hub, but what's your take on that? And has that impacted your decision on how to build Panuco?
You know, I think early on, it was certainly something that we thought about a little bit more and perhaps worried us a little bit. But the important thing to understand about Panuco, of course, is that it's always been an underground mining district.
That's right.
There's never been, major open pits in Sinaloa or this area. Mm-hmm. So, our focus early on and currently is just always be underground mining. It's what the communities are used to.
That's the status quo there,
exactly.
I suppose. Right.
450 years of that type of production, it's in the community's best interest to keep going with that.
Yeah. And therefore in yours to follow the tried and tested path. Underground mining is what they know, what therefore the labor force knows, which is going to be important, right?
Yeah, exactly. And it's actually the most profitable way for us to do this as well.
So in terms of near-term news flow, Mike, because, everyone's going to want to know what's next from you. You guys have done a crazy amount of drilling. I know you're still at work. The Panuco district is largely unexplored still. Between now and your feasibility study in, I think you said...
mid-2025. Yeah.
Mid-2025. Okay. News flow from now until then. What can prospective shareholders look forward to?
Well, it's been very busy for us so far. And a lot of this work, that we've been doing will come out in news flow going into the feasibility study. So about a year from now.
Yeah.
And all the way, of course, into 2027 with first silver. But there's kind of two dual paths here. And the primary is de-risking. I think de-risking oftentimes to investors doesn't sound that sexy or exciting or necessarily profitable.
Sure.
But in the context that we have here, it should, yeah. But in the context of, our business here where we have an achievable, attainable CapEx, a pathway to finance this CapEx through, very simple and conventional debt to equity approach. De-risking is actually how we kind of create the most amount of value. So it's, the test mine, getting underground, getting our eyes and our hands on the vein there, understanding how it reconciles to drilling, understanding the metallurgy, but also bringing some of that early cash flow, i.e. high margin material above surface.
Yeah.
That's important for us. So we'll have some news out on the test mine towards the end of the year.
Okay.
Permitting, that's going to be important for us as well. So we're looking to submit the permit before the end of the year.
Yeah.
Whether or not that's something that we really kind of publicize, that remains to be seen. But, it's an important step for us nonetheless.
Yeah.
And then we have, further kind of works towards, this feasibility study, whether it's detailed engineering and these types of things that we can potentially talk about. Another kind of permit related or project de-risking things that happen in the wings. So those are really important, but I think the most important is really that test mine as we move forward.
Yes.
And then the resource update and kind of higher confidence, resource updates and,
okay.
categories.
Can we talk about Vizsla Royalty?
Absolutely.
Yeah. I'm so curious, like initial inspiration for the concept, and maybe assume my audience has heard nothing about it. What is Vizsla Royalty?
Well, Vizsla Royalty is a way for Vizsla shareholders to preserve some upside for the discoveries that haven't been made yet. I think that's kind of the best way to explain it. We do know how rare a project like ours is. It's one of the very few, even in the precious metal space, but certainly in the silver space, one of the very few, big NPV, high margin, low CapEx projects out there. We truly want to develop this project. We want to drive it forward, and we want to be the operators of this project and this company. But these types of things are often in such high demand that another company may come and give us an offer that we may have to take because it's in the best interest of the shareholders.
Yeah.
Now, if that happens, we feel like we'd be giving up all of the potential, upside on discoveries that we haven't made yet across this district where we've only drilled 10% of the veins.
Yeah.
So we thought that we would spin out a fresh 2% royalty on the district to our shareholders so that if the mothership company were taken over, there still would be exposure through a 2% royalty on future veins and future discoveries as they happen in the future. So it's a way to preserve that upside.
Is this the Sean Ruzin playbook, or what were you looking at? What models were you looking at?
I think Great Bear is, Sean Ruzin for sure, but Chris Taylor and the Great Bear crew, very, very good there. Yeah, well,
great way. I love how you put that, to protect our shareholders' interest in future unrealized upside. Yeah. That's what this does, right? It keeps them in the game, right?
And that comes from the fact that we are shareholders ourselves. So we own about 15% of the company. I was the first shareholder. I was the founder of the company. So, our interests are aligned with shareholders.
And that's a 2% royalty?
That's right.
Okay. Any interesting terms attached to that, or anything that would
It's pretty vanilla. Everything that we're trying to do here is pretty conventional. So it's just a 2% royalty across the property.
Yeah. Got it. Okay. Look, Mike, it's been great having you back on the show. And congratulations, because when you were on your way here today, I was like, when did I first hear about Vizsla Silver? And it was when a mutual friend of ours, Jamie Keach, flew down to the project, and he came back and he was talking about the project. But more importantly, he was like, I'm just long Mike Konnert. This guy's going to deliver. He really wants to win, and he's going to do what it takes. Right. And it's been amazing to watch your story mature for those years. And honestly, I keep coming back to the economics. It's very exciting. It's a very exciting time to be a Vizsla shareholder. Is there anything else you want to cover today before we wrap this up, and I'll bring you back in the future to get caught up?
No, I think that's great. It's just really important to remember that, this is project one. This is the very first project in a very, very large district that has a huge amount of exploration upside. It already has industry leading economics, and, our vision is to become that major silver producer.
I love it. Well, congrats so far, and we'll bring you back on in a few months to get the update, Mike.
Awesome. Thank you very much.